I want to tell you about a high quality stock that pays big, growing, reliable dividends. These growing dividends are funded by growing profit because this business is the world's leading provider of water technology solutions. Humans literally cannot live without water. Access to clean, usable water is a must. Demand for this has never been higher. And yet, it's becoming increasingly difficult and expensive to meet that demand. Well, that's where this company comes in. By providing solutions around water, it's quickly growing its revenue, profit, and dividend. I've personally invested in stocks just like this one on my way to going from below broke at age 27 to financially free at 33. By the way, I explain exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. Getting back to the stock I'll tell you about today though, perhaps best of all, it looks undervalued right now. Price is what you pay, but value is what you get. Why is that important? Because buying a dividend growth stock when it's undervalued should provide for a higher yield, greater long-term total return potential, and reduced risk. With this in mind, I want to share with you an opportunity I recently came across in shares of Xylem Inc., which appear to be trading at a significant discount today.
Xylem Inc., stock ticker XYL, is a water technology company. Founded in 2011, Xylem is now a $26 billion by market cap water technology leader that employs approximately 22,000 people. Although Xylem was founded in 2011 after being spun out from former parent company ITT Inc., stock ticker ITT, its roots under ITT actually date back decades. As an independent business, Xylem now focuses on providing a range of water technology solutions for commercial and residential customers. These solutions range across the transport, treatment, testing, and more efficient usage of water. Fiscal year 2022 revenue can be broken down across three business segments: water infrastructure 43%, applied water 32%, and measurement and control solutions 25%. Xylem derived 46% of fiscal year 2022 revenue from the US, 26% from Europe, 20% from emerging markets, and 8% from other geographies. Water infrastructure, the largest segment by revenue, is where a range of Xylem products such as wastewater pumps, filtration, treatment equipment, and controls are designed to help with the transportation and treatment of water. The applied water segment is where products including pumps and valves drive increased efficiency for customers. Measurement and control solutions, the smallest business segment by revenue, is where products such as meters and sensors are used to help with testing. In addition, Xylem created a new business segment called Integrated Solutions and Services after acquiring Evoqua Water Technologies Corp., a leader in mission-critical water treatment solutions and services, in 2023 for $7.5 billion. The acquisition of Evoqua turned Xylem into the world's largest pure-play water technology company. And that's a great spot to be in. And that's because water is fast becoming the quote-unquote liquid gold of this century, much in the same way that oil was for the last century. Clean, usable water is becoming increasingly costly and difficult to access for a worldwide population that continues to grow in size. Yet, with urbanization and a global rise in wealth playing out, demand for clean water and the related infrastructure is likely only going to climb over the coming years. That means replacing aging infrastructure in developed countries, and it also means laying out new infrastructure in developing countries. Furthermore, technologies ranging from semiconductor production to data centers are extremely thirsty for water and must be as efficient as possible. All of this secular change and growth obviously plays right into the hands of Xylem. The long-term tailwinds are gusting its way, and it's why Xylem's revenue, profit, and dividend are positioned to continue to grow at high rates for years to come. Already, Xylem has increased its dividend for 13 consecutive years. The 10-year dividend growth rate of 11.5% shows what a start Xylem has been off to. The most recent dividend raise came in at 10%, so the double-digit dividend growth train rolls on. Now, the stock only yields 1.2%, which is in line with its own 5-year average. With a lowish yield like that, one really does need to see a double-digit growth rate in order to make sense of an investment. Assuming a static valuation, one's total return is going to come from the sum of business growth and dividend income. Based on that, we can see a case for double-digit annualized total return from Xylem, which is very nice. Since the payout ratio is only 35.5% based on midpoint guidance for this year's adjusted EPS, strong dividend growth could persist for the foreseeable future. Put simply, Xylem has been growing its dividend at a high rate for years, and I see that continuing for years to come. For dividend growth investors who gravitate toward high-quality compounders, these are very appealing metrics. Looking at business growth, Xylem increased its revenue from $3.8 billion in fiscal year 2013 to $5.5 billion in fiscal year 2022. That's a compound annual growth rate of 4.2%. Not bad. I suppose I might have expected a slightly higher number, but a mid-single-digit top-line growth rate is nothing to sneeze at. Meanwhile, earnings per share grew from $1.22 to $2.85 adjusted over this period, which is a compound annual growth rate of 9.9%. Very nice. That's a bit more like it, right? We can now see how well dividend growth and earnings per share growth line up over the last decade, showing deft control by management. Now, I did use adjusted earnings per share for fiscal year 2022, and it's only because Xylem recorded a one-time non-cash pension plan settlement that was unrelated to core operations. Still, what we seem to have here is a fast-growing business squarely focused on the coming century's liquid gold. Call me crazy, but I think that's very interesting. Looking forward, CFRA is projecting a 15% compound annual growth rate for Xylem's earnings per share over the next 3 years. Boy, that's even more interesting. This would represent a material acceleration in bottom line growth for Xylem if it comes to pass. CFRA sees big sales growth over the near term supported by, and I quote, contributions from Evoqua, as well as pricing actions, improved backlog conversion, robust wastewater utility demand, and infrastructure projects, unquote. In addition, CFRA cites the easing of recent headwinds as reasoning for faster growth ahead. And again, and I quote, supply chain bottlenecks have limited the speed at which Xylem has been able to convert orders to sales, though we are seeing sequential improvements with measurement and control growth accelerating as headwinds ease. Demand remains robust for the digital transformation of the water business, and we see ongoing support from industry adoption of digital solutions. We view Xylem as better positioned for top and bottom line expansion following the integration of Evoqua, which resulted in enhanced exposures toward high growth markets, unquote. This is a convergence of multiple favorable developments, a transformational acquisition, easing headwinds, and faster gusting tailwinds. For example, large infrastructure spending. Whereas the last decade was quite good for Xylem, the next decade could be far, far better. I'll note that Xylem's current midpoint adjusted EPS guidance for this year is $3.72. If Xylem hits that number, that would represent 30.5% year-over-year growth in adjusted EPS. Frankly, Xylem doesn't need to knock it out of the park with huge growth. It's just so hard to imagine a future in which demand for these products isn't there. We're talking about the proper care and usage of a finite precious resource that is required to sustain human life. That kind of visibility on the demand runway, it's worth a lot in my view. But if Xylem can grow at a high rate on top of all that, all the better. Helping Xylem further is its large installed base, which creates a high degree of recurring revenue. Overall, the low double-digit dividend growth rate of the last decade seems likely to continue into the years ahead. That's a lot of compounding to be excited about. Moving over to the balance sheet, Xylem has a rock-solid financial position. The long-term debt-to-equity ratio is 0.5, while the interest coverage ratio is over 13. Xylem's long-term debt load of under $2 billion is fairly immaterial for a company with a market cap exceeding $25 billion. Furthermore, cash on hand offsets about half of all long-term debt. It's also worth noting that the Evoqua acquisition was funded with Xylem stock, so the debt load hasn't exploded higher in recent quarters. Profitability is good, but I wish the returns on capital were higher. Return on equity has averaged 12.9% over the last 5 years, while net margin has averaged 7.5%. I'm looking forward to seeing the combined enterprise improve these numbers over the coming years. Overall, Xylem is a compelling way to play the world's increasing thirst for clean, usable water. Xylem caters to a precious resource that has essentially an unlimited demand runway. And with economies of scale, industry know-how, switching costs, IP, R&D, brand power, and an installed base that's entrenched, Xylem does benefit from durable competitive advantages. Of course, there are risks to consider. Litigation, regulation, and competition are omnipresent risks in every industry. Xylem has exposure to global geopolitics and public funding quagmires thanks to large infrastructure projects that usually spawn from government entities. An international footprint exposes Xylem to fluctuating currency exchange rates. The Evoqua acquisition was Xylem's largest ever, and there are serious integration and execution risks now present. Input costs can be volatile, and higher than normal inflation may weigh on near-term results. Xylem, like any other business, has risks, but I think the business model and quality more than make up for these risks. Also, with the stock down more than 20% from its 52-week high, the current valuation looks decently appealing. Stock is trading hands for a forward PE ratio of 29.3. That's based on midpoint guidance for this year's adjusted earnings per share. At first glance, that actually looks rather high, but I think two important things should be kept in mind. First, this stock's 5-year average PE ratio is 46.8, so there's always a big valuation premium attached to this name. Second, we're talking about a business that caters to, arguably, the world's most important precious resource, a precious resource with a demand runway that's infinitely long. There's a certain amount of value in that kind of long-term certainty. Also, the stock's yield, as noted earlier, is right in line with its own 5-year average. I valued shares using a 2-stage dividend discount model analysis. I factored in a 10% discount rate, a 10-year dividend growth rate of 14%, and a long-term dividend growth rate of 8%. That initial dividend growth rate reflects the near-term EPS growth acceleration that's expected by CFRA to play out after a convergence of factors start to work in Xylem's favor and blow a strong tailwind its way. I'm then assuming that dividend growth settles into a high single-digit range, which would be below Xylem's demonstrated 10-year dividend growth rate. Xylem has been used to growing its dividend at a low double-digit rate, so there are no Herculean expectations being placed on the business here. I'm simply assuming that Xylem is able to move just a bit faster over the coming years than it has over the last 10 years. With Evoqua now on board, supply chain headwinds easing, and major infrastructure projects coming online around the world, Xylem has a lot to work with. The dividend discount model analysis gives me a fair value of $118.03. The reason I use a dividend discount model analysis is because a business is ultimately equal to the sum of the future cash flow it can provide. The dividend discount model analysis is a tailored version of the discounted cash flow model analysis, as it simply substitutes dividends and dividend growth for cash flow growth. It then discounts those future dividends back to the present day to account for the time value money, since $1 tomorrow is not worth the same amount as $1 today. I find it to be a fairly accurate way to value dividend growth stocks. Morningstar rates XYL as a 3-star stock with a fair value estimate of $106. CFRA rates XYL as a 5-star strong buy with a 12-month target price of $135. I came out somewhere in the middle this time around. Averaging the three numbers out gives us a final valuation of $119.68, which would indicate the stock is possibly 9% undervalued. Here's the bottom line, guys. Xylem Inc. is the world's largest pure-play water technology company, catering to what is arguably the world's most important precious resource. The demand runway for this company's products is about as long and visible as it gets. With a market-like yield, a low payout ratio, double-digit dividend growth, more than 10 consecutive years of dividend increases, and the potential that shares are 9% undervalued, long-term dividend growth investors looking for a high-quality compounder with direct exposure to water should definitely consider this idea. And now for a special news announcement. Zoetis Inc., stock ticker ZTS, just increased its dividend by 15%. What a strong show of confidence in the business by management. As the world's largest producer of medicine and vaccinations for pets, Zoetis is a great way to play the humanization of pets. This is one of the highest quality compounders out there for long-term dividend growth investors. If you don't yet own any shares, I'd recommend to consider changing that.
Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.